inflation is trending lower, while unemployment claims are doing the opposite. Hi, I'm Beata Bukowski with Fairway Independent Mortgage with yet another weekly economic update. Consumer inflation rose 0.1% in March, with the headline reading coming just below the expectations. On an annual basis, it fell sharply from 6% to 5% last month. When we take out the food and energy, the most volatile prices, out of the equation, the reading went up from 5.5 to 5.6%. In addition, shelter index increased 8.2%, and that actually accounts for 60% of the total increase in all of those core items. On the wholesale level, the story is a little different. PPI, Producer Price Index, which measures inflation on a wholesale level, decreased 0.5% in March, and on a year-over-year basis, it dropped from 4.9 to 2.7%. The core, which takes away the food and energy prices, fell 0.1% and is at 3.4%. The bottom line is, PPI dropped from 11.7% at its highest to a 2.7%, a decline of 9%, means it's at the lowest level since February 2021. Small business optimism is down to 90.1%, and that's below the 49-year average of 98 points. Why? Well, small businesses are cynical about the future of economic conditions. As their chief economist has stated, hiring plans fell to the lowest levels since May of 2020, but strong consumer spending has kept Main Street alive and supported strong labor demand. Retail sales dropped 1% in March after February brought 0.2% decline from January's very strong numbers. Business owners will be closely watching whether the pullback in spending continues into the spring. On the unemployment arena, initial claims rose 11,000 last week. There were a total of 1.81 million continuing claims filed, which is a decline of 13,000 from the previous week. Bottom line, the 4-week average of initial claims shows about $240,000 in recent weeks, a high not seen since November of 2021. We will be watching this super closely. The Fed, in their minutes, stated that they are expecting a mild recession later this year. But they were also wrong, or I should say they were once before wrong, talking about transitory inflation when it hit those 11% marks, rather than an inflation that was created by their easing on quantitative and buying back mortgage-backed securities. So, with this mild, let's just see. That's all I had for you today. Beata Bukowski, over and out.